Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's December 22nd. Hope you guys got some great upcoming plans for the weekend, the long weekend here, and Merry Christmas to you guys. Hope you guys have a wonderful time spend with your families and get everything you want and everything. So today we got a lot of data to go over, so we're just going to jump right into it. We'll start off with the durable goods orders for the month of November. So in October, it dropped 0.4%. Forecast for November was supposed to go up 2%, and it came in a little disappointing at 1.3%. However, when you strip out the big ticket items like transportation, we have what they call the core capital goods orders, and the month of October was actually up 1.3%. And then forecast for November is supposed to be up 0.4%, and that one dropped 0.1%. So a little bit mixed right there, and obviously a little disappointing for investors here. Then when it comes to personal income for the month of November, so in October it went up 0.4%. We're supposed to go up another 0.4%, or expected to go up 0.4%. And again, it came in a little disappointing at 0.3%. And then on the other hand, now we got the opposite. So instead of making money, you're going to be spending money. We got consumer spending. October went down, or I mean not down. It was only went up 0.2% in October. Forecast for November was supposed to jump to 0.5%, and it went up 0.6%. So obviously, people are spending more. That's usually Black Friday and everything. So we kind of saw that with retail sales that were showing good numbers for the month of November. So that kind of makes sense. Now we also got core inflation. Now this is the big one that we've been kind of one of the things we've been kind of waiting for. This the Fed's favorite gauge is this part of the personal consumption expenditure, or PCE number. So this is where you strip out the from the headline number, we strip out the food and energy, which creates the volatility, and this is really what the Fed looks at. So we had a 0.2% increase in the month of October. For November, it was supposed to only go up 0.1%, and it came in line at 0.1%. So this brought our year over year from 1.4 to 1.5% year over year. The Fed is trying to get this to 2%. We were pretty close right around April, May area. We were up like 1.8%, and then it started going the opposite direction. It started dropping down all the way down to like 1.3%. Now it looks like these last couple of months we've kind of went up 0.2% since then. But it's been very stubbornly low for a while here. So we'll have to kind of wait, watch, and see if this rises or not. But the Fed's been really kind of watching this. It's kind of wondering if it's going to go up or not, or if we're going to maybe we have a new norm here. So, other news, we got the new home sales. We had October came in at 624,000. This is kind of like what the projection for the year, on pace for the year, and then projections for November is supposed to be 658, and it blew it right out of the water. It jumped 17.5% to 733,000 new home sales. So, way to go for almost year end here for the month of November. 733,000 new homes on pace. So, what a big difference here. Consumer sentiment. This is a study that brought to you by the University of Michigan, and we had two readings in the month of December. This is going to be the final reading. So the previous one came in at 96.8%. Now we thought the forecast was going to go up a little bit to 97.1, and it tipped again down to 95.9. So people are probably feeling a little less cheery. Maybe it's part of the stress of the holiday seasons. Hard to say, or maybe just the back and forth with everything going on with the news and politics, everything else, and it's hard to say. But people weren't feeling as rosy as they were earlier in the month and such. Let's go ahead and take a look here at the headline news. Well, I'm sorry, I I put stock market as Bill. My apologies. Stock market is actually down. I meant to write down, and I guess I had Bill on my mind. Stock market is currently down so far this morning. For the week, they're actually, it looks like they'll close upwards, but today so far they're down. Don't expect a lot going on to this. The bond market will be closing at about 11 o'clock Standard Time, or Pacific Standard Time, or 2 o'clock East Coast Time. Stock market will be open a little later. Of course, Monday being Christmas, it will be closed. I don't expect a lot of activity kind of going on today, or nor probably most of next week, primarily because a lot of the big hedge fund guys will be going on their vacations and really won't be making the swings or the trades on there. So you may see some little bit of trades here and there, or maybe a spike here and there. That's a lot of it will be due to the day traders that are out there. But headline news today is we got the tax bill, as you probably are aware. It passed the Senate and the House, and then it's moved over to President Trump's desk today. It's supposed to be signed into law today. Now there was a possible aversion where it looks like there was a group trying to uh, prevent that from happening by having the government shutdown. Because if you recall, the bill they had. They kind of kicked the can down the road, and that yes, and I believe this was like the 20th or 21st. They're supposed to uh, have another bill, and they're going to try to create a government shutdown to prevent from the president signing that into law and kick it into January. But that basically got overted by basically the Republicans. They basically passed it through and basically pushed it down to January 20th, or I think it was January 19th or 20th, and so basically they have funding through then, and they had the pass go. Uh, pay to go, and so it allows Trump to be able to sign the new tax bill today on there. So we kind of averted a government shutdown as well. Now on the international news, we got the Spain. They had we've talked a little bit about before. Catalan has been uh, trying to separate from Spain, and the Spanish government came in and kind of took over, and now they had another parliamentary election and basically kind of push that forward momentum again. That movement is starting to go back into place again. Um, so again, it's creating a little bit of tension in Spain again, which is kind of breaking the news over there. So let's kind of see how this is kind of playing out in the bond market and see where rates are going today. So here's the MBS or mortgage-backed securities. As you see, we got this floor here that we've kind of hit over the last couple of days after a huge drop here. We seem to find a little bit of stability here, and we're kind of up maybe about two basis points, which is basically not giving us any change in pricing, really, is what that means. So we're up about 2 basis points from where we left off yesterday. And again, we don't really expect too much change here, but it looks like we got a little stability, and basically we might be able to find ourselves to be able to bounce maybe back up closer to the range here with these moving day averages and stuff. So we might be get way back up there and recover some of those losses we've had over the next week or so. Again, we'll have to kind of wait and see, but again, looks like we got some stability. No changing pricing for interest rates today from where we left off, and next week again should be pretty much a mild week in terms of movement due to a lot of the big hedge funds, the big traders on vacation stuff for the holidays. So, and now the Treasuries, same thing. Treasuries, not a whole lot of movement. It is up maybe 1 basis point, or about 1 basis point. So it's up about 2.4. I think it's around 2.48 right now, where we were before. Still off the high we had a couple days ago. We were at on Wednesday, we went up to 2.5, 2.5, and now we kind of dipped down to about 2.48. So that pretty much wraps it up today. If you guys want to get more data, just come over to Twitter. You'll find me at Mike Bjork. We don't got a lot more time in the markets today, so it won't be a whole lot out there. Again, primarily because in a couple more hours, the bond market will be closing. And so 11 o'clock Pacific Standard Time. And anyways, I hope wish you guys a very Merry Christmas. Hope you guys enjoy your long weekend. Hope you guys enjoy your times with your families, and simply just enjoy yourselves. We'll look forward to see you guys on Tuesday. Thanks so much for watching, and again, have a great day. Bye-bye.